Good evening. Ira Epstein with your weekend edition of your financial market wrap-up. And this is for Sunday evening, 6 p.m. Central Time, November 17th. Interesting evening. All right. We're down a little bit more, as you can see in the Dow. The S&P holding right through here. NASDAQ up 72 and the Russell up. Now, I did a special report today. It's already on the website. And if you go to special reports, it's pretty simple. You'll be able to move your cursor up here. Let me tell you, I did everything different. You're not going to see this type of chart analysis. All I looked at was what happens from the election, November 5th, in trading days for the next 30 days. And there are seasonals based on it. You've got 125-year, 96-year, 25, then a 25, a 15, a 5. And I go through them all and I mix them up for you in a pretty interesting way. So you go to iraepstein.com, special report. That is where it's at, or you can move your cursor right up there. Got that? Pretty simple, but I think you'll find that what it does is when you look at this, your jaw is going to go, what? And if you like the seasonal charts, I worked out with SeasonX also for you a deal. You can get it free for X period of time. And then if you decide you want to subscribe, they will even give you an initial discount on it. So iraepstein.com under research, under special reports. Pretty simple. Take a look at it. I think you'll be fascinated by what's happened historically. All right, let's go back right here. So when I look at the markets, you can see that still on a monthly area chart of closes, you're still up 2.88%, even with the large break that we had at the end of last week. And as you could see, the market did slip back. The high has been 60.25. We are, if the market finished right here, approximately 122 points under that. You can see the little bit of a pullback you're getting in the marketplace. You can see how the market has still got a trend that is up, higher lows, higher highs on a weekly chart. The 18-week moving average of closes is 57.04, about 200 points lower. I have serious doubts about it getting there. When we look at how the market's done against the swing lines and then the Bollinger Bands, it's thrown the market back. And you are now fighting on a weekly chart. Are you going to stay embedded? Embedded's the strongest signal. When it stays embedded, it means the pros are buying the breaks in the market until the red line closes under 79. It can afford to close under it 1 week if it gets it back the following week. It's much more effective on daily charts because you're looking at 1 day where it can lose it, and if it comes back the next day, you do something with that. So just understand it. And it goes from Friday to Friday, not intra-week. So that's the other thing you always got to pay attention to. So as I look at this chart, I am still in the bull camp. Haven't changed anything that I see there. When we take a look at the Dow, the reading on this is 80.45, so it's still embedded. Again, a market that's pulling back. It's not quite the same as bullish picture. You've got a higher high and a lower low, not the same bullish picture you have in the S&P. In the NASDAQ, you are losing intra-week the embedded reading. Now, here's where it finished up. This is what's important. It wasn't lost on Friday. So you can lose this early in the week, just as you're doing in this reading, and come back midweek to late week, and if it's embedded, it's still good. So the market's just trading back and forth here, fighting for direction, and the Russell is the weakest. It was overbought. It's in a correction mode. It never did embed. When we come to the interest rates, while you're getting a bounce off the lower Bollinger Band for the past 2 days and coming up tonight, there's certainly nothing here that's getting the market going. And I think last week when Fed Chair Powell made a statement that the Fed is not in a race to lower interest rates, I think that sort of just like that in the market. CPI and PPI numbers were not of the sort that the Fed has to make a cut. But you're going to get PCE coming out shortly. Then you're going to get another set of CPI, PPI jobs report as well. Each week you're going to get the unemployment claims, as you know, and they have been acting bullish, not bearish. In other words, we are not seeing a big climb in them. People aren't letting people go. And let's face it, the temp workers are getting hired now. You know that you'll hear from the big companies they're hiring for the Christmas season. You're about them. You know that you've just come through a quarter, and we're not through with quarterly reports. We still have NVIDIA coming up, but that's the 20th. But as you look at it all, there's been a beat. So regardless, this break in the market, please take a look at that special report that I've got. I think your eyes are going to open. Lower highs, lower lows right into that part of the market. Dollar index over the upper band. It only stays over that 5% of the time. It is a weekly chart. I would look for it to give something up right here. I'm not bearish, but I would not tell clients to buy Bollinger Bands. Generally speaking, it's not the smartest thing you can do. And this has been wide enough where you can't say it's breaking out to the upside. At least I can't using that theory. Same in the euro. While it's gotten beaten up and under the lower band because of the dollar strength, strong interest rates, strong economy in the United States, maybe it's a bit overdone. I think it'll want to climb back to that number. The Canadian dollar has got itself just locked in on the bottom part, and it keeps dropping away. And as long as it's riding it, it can keep doing that. So I'm not seeing anything here that says to do anything. I see an oversold market that is trying to embed, hasn't done so, and it's going to be down so far if it does embed. I didn't say that it will, but if it does, I wouldn't trust it. You've already dropped too much. Japanese yen. How do they hold their currency together with a U.S. dollar that's this strong on a relative basis? That's the problem. I'm not saying their economy is not good. I'm saying when you're looking at a U.S. economy that is still firing on all cylinders, when you are looking at it where the Fed is now throwing out a signal that maybe, first of all, there's no rush to cut rates. That's the thing. And the plan that they're going to cut every meeting, I think, is out the window until you get data that shows something that is weakening. And we're not getting that data on a month-to-month basis that is showing the weakness. Those are the things you got to look at. Bitcoin, well, this is the Trump rally. The market loves that President Trump, elect President Trump, or President-elect Trump, loves Bitcoin. He wants America to be a big player in this. You're probably seeing the embedded. Again, I wouldn't chase it over Bollinger Bands. The 100,000 level, that's the next target on the upside. In the energy market, Brent versus WTI, this is just the difference of the two. You can see that the Brent is just staying stronger than the WTI. When you come to the Brent on its own, it's still weak. It's oversold. It could be headed to the 68.60 level. That is still a target. In WTI, you have a higher high and lower low. Not quite the same picture, an oversold market that if it drops along with the Brent, it could be going to the 65 level. So that's something to look at. Remember, the Biden administration is totally through with buying strategic reserves. They're going to leave that now for the Trump administration to do. And another thing that has happened is today the Biden administration told Ukraine that they could use longer range missiles now to strike at Russia. Now, there's questions as to which missiles they'll use, but easily 200, 300 mile radius is there. I don't know what we've given them for the long term, but the fact that we did it opens up now for all of Europe, the NATO members, to allow that to happen. That's the first thing. Why is this happening? Because Russia's smashing the electric grids within Ukraine. As winter's coming, they're going to freeze the people out. That's the idea. They've got all the troops amassed. They're trying to capture back the property by letting Ukraine strike back this way. Maybe when Trump gets into office, some type of peace can be struck between these countries. We will find out, but that's what I think is going on. When we look at the gasoline, lower highs, lower lows, coming down into an oversold territory, you don't do an awful lot of driving in the wintertime here. So you put it together, you try to come up with a game plan for yourself, and I'm going to repeat. My special report on stock indices, Ira Epstein, www.iraepstein.com or iepstein.com. You'll figure it out. I know that. I will talk to you all later. You have a good day.